there a problem with my entry? Why didn't I get involved in the trade if I forecasted it? So you start to ask those quality questions.
I know it's gonna hurt, but you're worth fighting for.
Welcome to part 2 of this journaling process, so let's dive into it. Quick disclaimer before we do get into the bulk of this video though, is that I'm not an expert by any means. I'm not a guru. I'm not in a position to be giving specific advice, but I'm also coming from a place of actually just documenting my own journey, documenting these processes in the hope that you can take away a few key things, apply this into your own trading, and if it helps, then that's a bonus as well. So that's kind of a quick disclaimer. Really just want to document the journey, which is the main aim of this channel. So if we take a look at this and get into the main bit of this video. So missed trades. Now, as you can probably see in part 1 of this video, if you haven't watched part 1, definitely recommend watching that before you get into this video and then actually come back to this. So what's the reason we document missed trades, or what's the reason I document missed trades is the key piece of information there, is that and these are not trades that I could go into a chart, find a profit somewhere, and then log that as a missed trade and be like a hindsight trader and be like, yep, should have taken that, even though I know that it didn't stick to my plan. This is actually specifically keeping track of trade taken and missed trades throughout the week. And if I do happen to miss a trade that's congruent to my trading plan, that's when I then take a deeper look into this, document that, and figure out the specific reasons behind why I actually missed that trade, because I know I shouldn't. So that's the key piece of information. Now, going back to 2019, there was a lot of missed trades, and it's more so once you've got the trades taken and once you've got the trades missed, then you're able to identify, use that information that I've just provided, and then you can look to close that gap between where you are and where you want to be. So if your results right now are around, let's use January's results for an example, right? Let's say, for example, it was 2.4, right? And my missed trades equaled 9%. And then I need to close that gap between 2.4 and then 9%. Then I need to close that gap between where I am and where I want to be. So it's all about that. It's all about the specific details, and that's the reason that I dive into this process. So getting straight into it, let's take a look at February, because we are on that month right now. Now let's take a look at the first half, second half. Haven't really, nothing at this point. If Notion wants to hurry up, haven't missed any trades so far. Second half of the month. First half of the month, I did miss one trade. So as you can see here, total trades that I've missed, one trade. It was a win, no losses, no break evens. If we take a look at this, so we've got a couple of key lessons here. So let's take a look at this. Aussie Kiwi being the only trade throughout the second half of the month. And by second half of the month, I mean January. So this would have been taken on the 27th of Jan, but then held into February, therefore affecting Feb's results. So second half of the month that I could have personally looked back on as a missed trade. This should not have been this should have been a trade that I'd taken, which is why it's important to take away the lessons regarding keyword there that people don't like to use, discretion. Utilize discretion at key areas of value, because this is where the priority should be in regards to structure versus candle formation. So as we can see here, Aussie Kiwi long, 27th of January 2020, entry type specific to my strategy, and then the grade was a valid trade. So yeah, great trade. Total profit was 9.3%. And just completely a beast of a trade. And it happened to be, that's the difference. That can sometimes be the difference of taking a break-even month, or taking a low month, or even a slight negative month, to then finish on 10% plus. You could be so close to banking a 10% month and then consistently carrying that through. The amount of times that I look back on my own trades and been like, you know what, I finished on break-even, but then I was literally one trade away from being 10%, and there's not that mindset that you want to be focusing on the one trade that's going to bank you 10%, but it's more so just analysing the fact that you are so close sometimes and you don't realise how close. So if you're currently sat in the negative, or you're currently sat at break even, you literally could be very, very close to actually breaking through. You just don't know it sometimes. So yeah, it's important to not be too blindsided by results, because you could look at a minus 1% month think that you're ages away, but then literally 1 tweak and you'd back to a 9.3% trade. So it's more so the bigger picture as opposed to the black and white picture sometimes, which I've found personally anyway. Was this trade forecasted? Now this is the key part of this section here. The reason why this is important, so let's say for example, was this trade forecasted? Then I know that, okay, well, I need to increase my forecasting, or I need to get better with my forecasting. With this situation, because I've ticked the yes box, it's more so I've already forecast this trade. So now my mind's going, well, was there a problem with my entry? Why didn't I get involved in the trade if I forecasted it? So you start to ask those quality questions. Is this trade congruent to my trading plan? As you can see, yes it was. If it wasn't, then there will be no reason for me to document this trade in the first place. Little section on here on trade analysis outlined here. So what do we have? We had the bottom of the structure with the larger descending channel and the larger double bottom formation. So let's scroll down here. So descending channel, larger double bottom formation, looking for that push to the upside. And then, yeah, so look at this. Psychology was good here, so as you can see, good overall psychology, nothing too much to report back, clear frame of mind throughout the day. And that's a good indication, because it tells me that my psychology is good, don't need to dig into self-sabotage or anything like that. But if my psychology was not on point, then that gives me a clear indication that, okay, well, especially if I see this over a series of trades, more so than an individual trade, then this gives me a clear indication that, yeah, I need to dig into my psychology a little bit more. Is it self-sabotage? Is it limiting beliefs? Like, you need to dig into this. So this is the key section. And as you can see, it's quite simplified here, but usually in the past, when I was actually, in the negative or the break even or not quite in the consistency frame of mind, this is where I'll go into a lot of detail here, which is the key part. Reason for missed trade, so it was discretion in this area. So what if I put in the area of value that price was currently in, this is where discretion is best utilized because we're at an area of value. However, I failed to read between the lines here as I was looking for an exact third touch before getting long. This tells me that I was waiting for perfection and failed to recognize a message from the market when the trade developed. Remember, it is at the high areas of value when discretion is best used, and that's where I use it. So as you can see, that's the reason outlined that. Lessons, discretion. Let's take a look at the forecasted trade. So forecasted trade, what was I looking at? Well, I was looking at this bigger double bottom. Ideally just a descending formation here just to take that long. So that's what I was looking at. When was this? January 26th. I think that was a Sunday before the week, because I believe this 27th was a Monday. So this would have been a Sunday analysing for the week ahead. So that just shows you my thought process of before I got in the trade, or before I would have taken the trade. Daily time frame, looking at this, bigger structure intact, bigger double bottom within this descending channel, looking for longs. Now what did we get? We got this clear descending channel, and as you can see, we didn't quite meet that trend line there. I was, looking back on this, I was in that perfection mindset. It is literally 2 pips away. So do you need to be completely in that perfectionist mindset? No, you don't. That's a lesson that I personally taken away from this. So, just a key outline of that, but I just wanted to give you an insight into what this trade looked like prior to getting involved. And then after the trade played out, how did that develop? Well, as you can see, played out very, very nicely. And then we got to this area of value. And the reason I marked this on with the ray line, if we can see this on a daily, no, but as you can see with the arrow, I was marking in the beginning of the correction. This is an area that, price can often form deeper corrections, so I want to be a little bit more aggressive in these areas. Now, yeah, Aussie Kiwi is pretty corrected pair by nature, so just utilising management in that way as well. We can see the prices just trickled about, and then we start to get those pushes to the upside. As you can see, impulse, then we get that pullback, same there, before we can crash into the downside. So yeah, I would have been happy with this management. I think the main thing that I want to get across as well is that even if you miss a trade, try and manage it as if you're already in that trade. The reason being is that, it gives your mind frame of mind of, well, one day I'm going to actually take these trades and put a process in place to start capitalizing on this. So it's more so a psychological benefit that I found anyway. So as you can see from that, played out very, very nicely. Happy with the trade, but obviously I didn't take it, so it's more so just learning the way from the lessons. So that's where I then, at the end of the month, I'll look back on this, put in some key overview, some key lessons here, and then I can then apply that into March's trades. So hopefully that helped. Hopefully give you a quick insight into how I do that process and the reasons behind that. And it's more so, here's what I want to outline as well. Do you have to do this process? Definitely not. Is this going to take a lot more hard work? Yes, it is. But also you're going to get more rewards in regards to data analysis. So for example, if you take 5 trades in the month of Feb, but then you miss 2 as well, the amount of lessons, the amount of takeaways you're going to get from those missed trades, those 2 missed trades, is going to be so beneficial for your trading. And that's what I personally found within mine. And it doesn't always transfer into results straight away. Remember the J curve of you get knowledge first and then your results take a while to catch up. But once the results then catch up, then obviously things to progress really nicely. So hopefully that helps. Once again, like I said before at the start of the video, this is my process. This is not how you need to do your process or how everyone does the process, but this is how I document this. And I usually sit down on Saturday morning, do the trades taken, do the trades missed if I have missed any, and really dig into the lessons. So it probably takes me, I'd say total, depending on the week, probably like 2 to 3 hours before I then move on. So hopefully that helps. Hopefully you enjoyed this video and gained some insight into how I do this. Let me know if this helps you. Give this a try. Be willing to put in that work if you are, and keep me updated with how you do on this. So hopefully this helps. Catch you guys in the next video. Speak to you all soon.
With